Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles VinodSrinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog / newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you. Hi guys, just before we get into the video, the content which we're going to be covering in this video is completely based on our own perspectives and opinions. None of this should be taken as impetus to move and do something in terms of your investments. We're not SEBI registered investment advisors, nor do we claim to be. We hope that you exercise caution and risk in whatever ventures you take, and we wish you the best. And please do not treat this as investment advice. This is just both of us discussing ideas with each other with a camera turned on.
Yes. Your investment should be done with a good SEBI registered advisor, and it should be done slowly and prudently, not haphazardly by watching a video.
And if you look at the second stock which I had looked at back then was GSS Infotech, which I have on screen right now. I had bought it for about 27 rupees in 2020, and I had made a mistake in how I calculated its intrinsic value, and I thought that I overestimated its intrinsic value. So the price fell after I bought it, and I thought I made a mistake, and I sold it as soon as I made my money back on it. Whereas I also bought some of GSS Infotech in my uncle's account, and my uncle said, no, you haven't made a mistake, just hold on to it, let's see what happens. It's not a lot of money. Even if you lose it, it won't be a problem, but hold on to it. I panicked and I said, no, I want out of it, and I got out of it as soon as I made my money back. And lo and behold, in 2022, the company went from 27 rupees all the way to 324 rupees, as you can see on screen. And albeit the PE ratio is extremely inflated at 99 and even 342 in 2021, which should have been warning calls to sell it. And today it's at 95 rupees compared to its high of 307 rupees. So the point here is, you may be asking, shouldn't you have sold it at 307 rupees? But even if you look before the 307 rupees, it went all the way up to 140 rupees and went back down to 90 rupees. I could have thought about selling it then as well, but I didn't. So how do you know when to sell out of a position when it's overvalued and move on to the next thing? That is where the method which I'm going to be talking about will come into play. So the method which I'm talking about is called sell half and hold on to the rest method. And this is the method where you basically, as soon as your portfolio doubles in value, you sell half of your holdings in that particular company because you've retrieved all the costs that you put into it. This is just mental accounting. It's a very, from an economic perspective, it's an irrational way of going about it, but it works. And this is how it works. Once you buy a stock for 100 rupees, let's say, and the stock goes to 200 rupees. Let's say you have 10 of these stocks. You sell 5 of them, recover the cost which you put into it. And once it goes from 200 to 400, sell another half, 2 or 3 stocks, and hold on to the rest of it. And if it goes from 500 to 1000, sell another half. This is the coffee can method of investing, except there's an active part to it. And this basically makes sure that you don't lose out on the potential gains your stock has, but at the same time, you hedge your bet a little bit by taking out money whenever it becomes inflated. And this is purely mental accounting. There's nothing in the real world which says that when it doubles is exactly when you should pull out. You can make that number 1.5 times or even 3.5 times. That is, if it's 150% up, then you pull out. Or if it's 350% out, then you pull out. But the double method works because it's simple to remember. And this way you basically hedge against your bets. So when GSS went to 120, I should have pulled out half of it. And once it went all the way up to 319, I should have again sold another half and pulled out. This is provided that the fundamentals of GSS don't change. So this is the modified version of the coffee can investing method for those of us at home who want a more involved approach to this. So this is the method which I came across. What do you think about this method?
I think it's great. Only problem is hard implementing it because, like you said, you found phenolics cables and everything was hunky-dory. But when I look at it from the point of view of our viewers who do not know anything, okay, they're eager to start doing this, right? and they don't want to keep on waiting for some YouTuber or Fin influencer to tell them where to do it, where the next big thing is. They like to start trying to find their own cigarette butts, as what you call Ben Graham would say. And let's say you take this Finilex example. Here we go to Finilex. So right now Finilex has become expensive. So I listened to see this video and I'm like, okay, Sashwath said Finilex cable. So let's see in the same peer comparison, since Finilex cable is a great company, we'll look. So Universal Cable PE is 23. It's lower than Finilex cable. So maybe I should look at Universal Cable. So I open up Universal Cable and I scroll down, right? I first look at profit. Yeah. That looks interesting, looks good, right? EPS is looking very good. Dividend payout is also very good.
Yes.
So then I say, all right, I go into borrowings. Then I see long-term liabilities and look at reserves. That's also very good. It's not bad. Okay. There's nothing so far alarming about this. And then I say, okay, the median, is right now P is 22. So if I buy and hold this for 10 years, there's an opportunity this will become a Finilex and this will go to 40. Can I assume that?
Well, there's a caveat. And the caveat is that the numbers which you're looking at right now make sense, but you also need to go through the annual report and see what they're exactly doing with their business. Because that's what I did with Finilex cables to find out what I found out about it.
So that's the caveat.
Yeah. So the caveat is when you're doing fundamental analysis, you have to go all the way. You have to look at the annual report as well, because that's usually where the smoking gun is hidden.
Yeah. Numbers are only half the story.
Yeah. And most institutional investors do go through they have teams and teams of researchers to go through and pour through 10 years worth of annual reports in a matter of a week. So you as an individual investor will have to put in that time to go through the annual report to find the smoking gun, because very rarely does a company trade under value for no reason. There's probably something which the market is overweighing or something which the market hasn't opened up to, which is what it's your job to find out those opportunities. Like with Finilex cables, as I said, there was an ownership struggle which was causing it to be held back in the way it was valued. And the same way, Universal Cables, for this example, could be having something in its annual report which is holding it back in the eyes of investors. And generally where you find the smoking gun is when you go to investor con calls, or if you go to annual general meetings and read the transcript, you'll see that the investors who are currently holding the company are well aware of the smoking gun, and they keep pestering the board members about the smoking gun. They say, what about this though? You haven't done much about this. And then it's the job of the board member to calm them down and tell them that we're working on it. That's how I found out about Finilex Cable's smoking gun. So when it comes to Universal Cables or any other company, you'll basically have to find out what is holding them back, and you have to do your research. And if even after thoroughly researching about the company and finding nothing wrong with it, then you might have stumbled onto something which is a brilliant buy. So you need to do the legwork and make sure that there's not something which you've missed out on. Like, let's say, let's go through the promoter holding. Maybe the promoters are trying to, even the promoter holding is good on this. So maybe you can consider Universal Cables and check out whether
the company is part of the MP Birla Group company. So it's part of the Birla Group.
Right.
I think the main thing is these guys create high power, large capacity cables and, large capacitors. And the major customer for this is the power sector in India, power transmission. And that is the government.
Yeah.
End of the day. But they are currently with tie-ups in collaboration with Toshiba in Japan. And they're doing other things also. So maybe it is worth diving into. But what is interesting is, even in the screener you can see is, you can go to PE ratio.
Yes.
And see 10 years. When you say 10 years itself, the mean is
8.9.
So 2017, since they've gone public, it doesn't give you much of a track record to see. That's not even 10 years. So I would avoid this company. Simple reason is I would want to only invest in companies which have been for more than 10 years around. Yes, it might be part of the Birla Group. Yes, they're starting. And, since 2017, if you look at it, they've been trailing well below their PE. And if you look at it that way, it is overvalued. You cannot take Finilex Cable's PE and plug that into this and compare it. So you have to look each company individually on its own, not only apples to apples, but you have to look at each individual apple from the tree where it is. So if you look at it that way, this is trading well above what it usually trades at. So does that deserve, because the earnings also have not spiked. If you see the earnings, which is here in the light blue column,
It remain consistent.
Yeah, it's been consistent. Though market has been pushing the PE up, the prices up, they're expecting future earnings to come in to compensate for this, to justify this price. Or it could be just that right now we're in the middle of a bull run and everything floats.
Yes.
So it's floating this.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.